Hey folks, what a view behind me. I'm at Blackpool Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackpool Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackpool Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex, indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.
What's going on, guys? What's going on? It's Briggs Trades coming to you live with another week of breakdowns. Hope everybody is doing well. And so, so I wanted to come on here and just let everybody know, obviously, that we're back for another week. Hope everybody had a good trading week. I'm going to go ahead and get into it again. If you guys don't know me by now, again, my name is Briggs Trades. I'm the resident indices analyst for the Trading Up podcast. So I come on here every week and I basically break down charts and go through my progressions and talk about trading. So I've been trading for almost a decade now, or actually a little over a decade now, as of March of this year. So 2015 is when I started. Again, I started in the Forex space and then made a switch to indices and the future side of things. And right now I'm kind of in a space where I just trade both. So I really don't call myself a Forex trader or a futures trader. I'm just a trader, right, at this point. So but again, what I do is come on here and break down the indices and I break down some of the other chart progressions. So again, you guys know the drill. I love to see where people are calling in from. I know this is a holiday weekend, so I know people might not be thinking about the charts, but love to see, again, people commenting and going live. So if you are watching this live, just say you're here. Put a chat in the box chat and let me know where y'all calling in from. So let's go ahead and get into it. I got my screen up. It looks like we should be good there. So I'm going to move this over so I'm a little bit out of the way like that. And then we should be good to go. So let me pull this up and get going with everything. Shout out to Narita. Narita's on here. She is a mentorship student. So she's been on a lot of the live calls lately. So shout out to her. So let's go ahead and look at dollar analysis, right? And so again, I'm going to run through all of the indices. I'm going to run through some of the major currency pairs. But again, you guys know that I always start with dollar. And if this is not your first time watching, I start with dollar analysis because everything builds off of the dollar. And once we have an understanding of dollar, then we can go ahead and go from there. So coming into last week, this is basically what we wanted to see projection wise. So a lot of times I leave my arrows up, especially on dollar, because I don't actively trade this. I just use this as a barometer, like I always say. So there was these arrows are pretty much the same thing from the last call last week and what we wanted to see. So we start in the weekly time frame again, right? We ran a level of sell side liquidity here. You guys can see that pretty clearly, right? And so we took out this level, right? But we closed below it. And again, there's a lot of times where we might see the market reverse off of these levels. So we have to be careful. But at the same time, we don't, this is like trying to catch a falling knife. So we shouldn't be trying to look for buys in this situation, even if it wicks off of this level at the low or takes out this level down here, right? We should be asking ourselves, are we going to continue to go lower? And that's kind of the bias here until we get any type of reversal. So what happened last week is, again, we wicked off of this. I wanted to see the market potentially trade back up into this imbalance here / this inverted fair value gap that we'll see on the daily time frame. And let me make sure that I'm doing this right because I think I'm on the wrong chart. Okay, let me do this again, because every week this happens, and I want to make sure that I get this right, that I'm actually looking at the right one. So let me go back up to the daily again on this one. Boom, there we go. So what happens when you have like a million tabs open? So okay, so anyway, so coming into last week, what we wanted to see happen, again, looking at this weekly time frame, is the market trade back up into this old imbalance here, and then look to take things lower, right? We ended up running this level of sell side, like I was saying before, and wicking off of it last week, and then really closing at that level, just below that level again. So what am I looking for this week? Well, we traded back up in here to start the week, and if you jump down to the daily time frame, we did kind of respect this level a little bit. There is a secondary, in addition to this inverted fair value gap that you have right here, there also was a secondary imbalance here that the market traded back into, right? From that low to that high, and then a secondary one from this low to that high. So all of this really could be considered, a volume imbalance or balance, or just kind of an area of interest, all of this in here, right? So ideally, I wanted to see the market trade back up into here and drop. We did technically trade back into that range very slightly. It didn't go as high, as maybe the highest, but that's okay. Once we enter that zone, it's when we really want to start looking for opportunities to short. And so that's what we got here, right? So what do we have now in the weekly time frame? Overlapping that same kind of area, we have that weekly imbalance here, that weekly sell side imbalance. So what do I want to see, man? I want to see the market continue to go lower, right? So I want to see that market really run. We could retest that same zone again because it's a higher time frame area of interest now officially. So we could run back up here and do this again, but or we could just keep running short. But either way, I'm bearish, right? I want to see the market continue to go lower based on everything that's going on. And really, we're just looking for areas where we could form the high for the week. So it could run off like this. It could retest these areas again. There's some unmitigated stuff even on this daily time frame where we could trace back up into that. So I'm going to leave the same projection, but ideally I want to see this run lower, right? And what am I looking for targets? Well, let's hop back to that weekly time frame. The area that I'm looking for us to hit this week, just under these lows right here. I'd like to see the market really retrace and hit that if we can get that. A lot of times with these weekly projections, sometimes I project too far in advance. So you might see this happen this week, and then the next week it retraces, or it could all happen in 1 week. So that's what I'll be looking for. But this is extremely bearish, right? It doesn't matter what what concepts you trade. It could be SMC concepts. It could be just your traditional, retail concepts, right? So, but this is This is a double top in any reversal in any kind of structure point, right? You can see that forming out. So ideally, yeah, that's what I want to see happen here. So basically I'm bearish on dollar, right? So if I'm bearish on dollar, I should want to be bullish on currencies, right? And so what do we have here? Last week on euro, again, euro and dollar are going to have a very inverse relationship. So usually the charts are going to look the same, completely opposite on one on the other, right? And so if you look at dollar, we have this double top that's forming, obviously, or this huge reversal in the market, right? If you obviously trade SMC concepts like I do, we also have the opposite here, right? Where we form that high, failed to really break it, traded into an imbalance there, and really shot up, right? So we're bullish here by pretty much any kind of definition, right? So last week, again, what we wanted to see was the market really find reasons to continue going up. And I had a few levels marked out. I think I actually had them marked out on Euro USD, not my Euro futures. But I wanted to see the market really run up and take out this high. We didn't quite get there yet, but this is the long-term goal. And again, just like we don't want to bet against bearishness on the dollar, we really don't want to bet against bullishness just yet on the euro. Let me go back over to the comments. Let me go to the comment section really quick before I move on. So AP Nice Trading says, I don't know what you're saying there. Shout out to you though. Raheem is calling it. I think he's calling it from the UK. That's awesome, man. I've never been to London, the UK. I'm trying. That's on my bucket list to go there. Maybe this year, next year. Art P says, hello, first time here, found your stream. Shout out to you. Your lingo sounds like you're an ICT trader. Is that correct? So I would say this. I've employed a lot of ICT concepts in my trading, but there's really three. I've had like three big teachers in my life, three main mentors, and I kind of took bits and pieces from all of them. And so SMC/ICT is one of those things. But to be honest, I was trading those concepts, man, back in like 2015. Like there's been more than one kind of iteration of those things. They're not anything new. I would say they kind of align with that, but then there's also some retail concepts that I employ too. So kind of a mix of both. I know that like people always want to make it seem like they got their own thing going on. And so, but I have no issue giving credit to a lot of people, and those SMC concepts, ICT, whatever, they've definitely shaped some aspects of my trading for sure. But then there's a lot of other people that I've taken things from. When you trade for a decade, you kind of realize that like there's a lot of truths in the market, and sometimes a lot of things are just rehashed versions of old things with a new spin on them. And so right there. So basically, when you're trading for, again, this long, you kind of take bits and pieces from a lot of different people. So yeah, I wouldn't necessarily call me an ICT trader, but I've definitely employed some concepts for sure. Okay, cool. Let's go to Euro. So again, just like on dollar, we're bullish, right? And we want to see the market go higher. Same thing on Euro USD, right? I'm sorry, bearish on dollar. We want to see it go lower. We're bullish on Euro and Euro futures. Again, 6E1 is your Euro futures if you're a futures trader, or you just trade the traditional Euro USD, right? Same thing. So last week we didn't take out the high that we wanted to see taken out, right? This is this week's candle. So if I go back 1 week, I said a couple things can happen. One, we can run this high, or we can set it up so we can probably form a weekly fair value gap, the high end of a weekly fair value gap, where we can take things to the high, right? So that's basically what we got here. And we got, a few levels that we want to pay attention to going into next week. So I'm just going to fast forward. And we did make a run higher, right? And we are very bullish. So I definitely want to see the market continue to go higher. And a couple things can happen, obviously. I want to see the market potentially retest a low for the week and then run higher. So if we're looking at the daily time frame, right, you could see the market do something like this and then run higher again, or jump it down to maybe like the 4-hour time frame. If it was me and I wanted to run people's stops and take people's money, then I would probably take out this low again. So same idea here. Running the low of like Thursday, right? Or maybe even trading back into the imbalance one more time like this, and then taking out the high. That's what I would do if I was trying to clear the board and get people's money and go higher. If we look at this from the weekly time frame perspective, though, I would not be surprised. Drop this back out. Yeah, I wouldn't be surprised. I mean, at some point, I think we'll trade back into this imbalance here, and I'll move this out of the way so you guys can see better. At some point, we'll trade back into this imbalance. So if I really wanted to shake the game up next week, right? Like if I was a market maker, I would want to trade back into here and kind of clear all this liquidity from last week and then find reasons to go higher. It's a weekly imbalance. That means at some point it's going to get filled, right? So that's what I would do. But I think depending on how bullish we are, especially the end of Monday, we'll kind of have a really good kind of idea of that. But I would do something like that. So I could see like worst case scenario, we come back down, run that low, which trades us back into that weekly imbalance and then goes higher. So there's a lot of different levels, but the key levels that I'm looking at here are going to be the low of Thursday. I'm sorry, the low of Friday, the weekly low, which is here, and then this overall area right here, which is the weekly fair value gap. And I'm just going to note that because I'm going to probably reference that on a few different levels next week. So I would not be surprised if we ran here. We also could play next week, since we're very close to this target. Like, I would not necessarily be surprised if we ran this level and then rejected. Something like this, where we, run this high and then reject. So there's a few different ways we could play it. Usually on these weeks like this, in most weeks, I usually try to wait until Monday is done in the books, and then it kind of gives me the frame of reference for what the rest of the week should do. So if we come out of the gate on Sunday night going into Monday, like London session, and we just take out these highs, or we're just making a bullish run, then we might run this first and then reject and go lower, right? And then there's also the possibility that we just don't ever come back here either, which could happen. This could get triggered kind of like a breakaway gap, right? Where we run higher. So there's a few different scenarios. What I also am watching too on the higher time frames is the fair value gap, the consequent encroachment of this fair value gap, which I would like to see the market kind of trade over this high again and really close above that. So there's a few different levels that I'm watching the market, but I'm not really eager to take a trade next week until I see some, more confirmations. So that's what I'll be looking for next week on euro. Let me go to pound, GBP. So GBP is actually one that I like a lot more. There's a few reasons for that. So this is our weekly level, right? And so going into last week, there was a couple of things that I said on the call. If you guys go back and watch last week's stream, there was a couple of things that I said I wanted to see play out, right? So the first thing was I wanted to see the market trade into this imbalance, and I wanted to see it invert. Now, I ended up taking trades on euro last week because I thought euro was just a cleaner setup based on everything that was going on. But now the number one thing that I wanted to see euro or GBP do, pound do, was trade above two levels, consequent encroachment of this wick, which we had closed right on the dot. So I really wanted to see a daily close above this, but then I also wanted to get through this level. And I figured once we got through this level here, this old civvy, which is, would be an inverted fair value gap at that point, these highs right here were something that could get hit, right? That's the level that I wanted to see hit. And so if we fast forward to this week, right, what do we get? We didn't really get a great setup in that I took, and maybe there was one that I missed for sure because I was focused more on euro this past week. But now that we inverted this gap, I'm really looking to take things high. So where's the pullback levels for this week that we think the market could run to? Boom, taking things to the high, right? So that's the level that I want to see the market really run to again for this week, and really maybe retest the inversion of this gap. This is probably the lowest point that I would want to see the market kind of go for the low for the week and close at that level before we take things to the high. If you look at the daily time frame, yeah, we've already started to really do a couple things here. We've tested old imbalances inside of this run. So worst case scenario, maybe we run these lows. Maybe we even trade back down to just under CE level, which is right there. So I'll do that, but I don't even think we'll get that low. So I'm looking for any type of retest of this zone for next week. And then I'm looking to take things higher. The daily levels that I'll be looking at, again, in between that high and there will be this zone right here. Maybe we even run this zone, trade back down here, and then go higher. But I'm bullish. I'm bullish in this scenario, and I want to see the market go higher. So I'll be looking for opportunities for this market to really run through and take these highs out. And yeah, go from there. So I'm bullish. So I love how this kind of plays out. So I'm looking for really bullish opportunities on pound next week. So let's look at NASDAQ. Um, Let me go to the comment section really quick. Raheem says, London is a great place to be in the summer. You should visit one day, man. Yeah, like I'm definitely gonna check it out. I've been training myself, man. I've been watching a lot of episodes of Top Boy so I can kind of get the vibe and the lingo down. I don't know if that's accurate or inaccurate, but that's been my go-to like reference for UK culture. So um let's see. Instagram. I'm logged in on a few different platforms. I actually added Instagram to this watch list. So people on Instagram who follow me there should be able to follow me too. So again, if you're not following me on at Brinks Trades, you should be watching. It looks like I had a few people join. Shout out to Sheldon. Shout out to Martin. Uh, so there's a few people on there. So I'm just trying to grow the platforms. I'm trying to get this on as many platforms as possible. Obviously, you guys know I'm on YouTube too. And I think it's where the most of the people are joining in from right now. So, all right. So let's look at NASDAQ. Actually, let's look at gold first, right? Let's just keep it with the currencies and then we'll go. So what happened on gold last week? Again, you guys know that gold has been making all-time highs. Again, when we talk about gold, we know that that thing's going to move anytime we're in times of uncertainty and turbulence, right? And that's just where we're at right now with the markets, right? Because we don't really, there's a lot of stuff going on. There's policy changes, there's, relationship changes, new government coming in, doing a bunch of, making a bunch of noise. So what I want to see next week is I want to see the market really retest key levels, and I'm not betting against bullishness, right? So I'm not betting against a market that's been going up and making new highs. If you're trying to short this, you would have got killed a bunch of times. You might have made some money, but you would have lost more than you would have made for sure. So ideally, what I want to see here is the market really attack two levels. There is the wide open fair value gap that we did not retest. The market was just extremely bullish. So we could run down to this level, but we did form some new imbalances here. So I'm really going to be looking to buy in this zone. This is the best case scenario for me, but we could take out these highs. So I'll do this, but then I'll like make a note here that says this is also looking for buys here. And I mean, like gold is in a scenario where again, because people invest in gold in times of uncertainty, this thing will probably keep making new highs all year. I mean, this year is going to be a crazy year. And so one of the things when you're trading is you got to go to where the volatility is, for sure. Control volatility, right? Like not only is it's not enough just to have a volatile pair you're trading, but you also have to be comfortable trading that pair. That's why I think a lot of people are crashing out on NASDAQ. And I see so many people trying to trade NASDAQ and the indices right now, and they've been trading for like a year, or they've been trading since COVID, right? And they don't know what they're doing, and they haven't really experienced a bear market yet. And so they're kind of blowing accounts, or they're blowing their challenges, their evaluations, or whatever. And so it's just it's kind of funny to watch. I think to be a good trader, you got to go through at least like 2 bear market cycles, 2 bull market cycles, because you get used to seeing trends and things. And so like a lot of times people hop in when stocks are booming and they think that they're a genius because they caught something that's going up like this. Like gold trades, like you're not a genius if you're catching this. You're just buying the dips essentially, right? Like this is not skilled trading at all. This is just like, okay, there's a dip. Okay, there's an area where I think the market could pull back to, keep going, right? There's not really like any type of like critical thinking that you have to employ with this stuff, because this is just where the market's running right now. And there's a lot of volatility in this. So what's going to happen is you're going to see a lot of gold traders this year that come out and they're like, oh, I love gold. I'm a gold trader. This is what I do. Because everybody wants to kind of brand themselves. And then next year or a couple of years from now, when the market in gold stops moving, they're going to be blowing their accounts because the market's going to start chopping, right? Like stuff like this. Like people don't know how to trade this. They keep trying to buy the dips, buy the dips, buy the dips. And you can get killed, right? There's whole years, like for a 4-year period where gold was just chopping back and forth, right? From 2014 to 2019. This is 5 years of price action. Dang. So like, it's easy to trade now and take advantage of it, but just know like you're never as good of a trader as you think you are, and you're never as bad of a trader as you think you are. And I think that's, as long as you know that and you know that this isn't forever, um, you should be okay. But in the meantime, take advantage of the volatility, right? So anyway, so what I want to see here is I want to see the market pull back to this fair value gap at that 3,109 level. Again, daily time frame on gold. This is gold futures. Again, if you trade the Forex, then you just pull up XAU, USD. It's the same thing. But I'm looking at the gold futures. So that's what I want to see. I would look to take buys here if we do get a good break in structure and like a good kind of lining up of the things that I look for when I look to take buys. And all of my students know that, right? I have a model which I've dubbed the New York continuation model. I might come up with a sexier name for that at some point, but like that's what I call it right now. And basically, I only trade New York session, so that's what I look for. When I trade. So if the setup is there when I'm looking to trade, then I'll take it. I have no issues with that. My live group, everybody knows that I don't really care to trade gold, and I'm not a gold trader per se. But I ended up calling, a couple pretty good trades on gold over the past few weeks in real time. Obviously projecting it ahead of time, but then playing this out in real time too. And so my students got to see that firsthand. So it's not really about the industry or the market, the asset. It's really just about your skill set and your ability to reprice and manage risk. So that's gold. Let's go to NASDAQ really quickly. Again, you guys know I'm on the future side of things, so I'm going to pull up NQ. But if you are a Forex trader, NAS100, just the same, right? So what do we want to see here? We wanted to see on the weekly time frame. Hey, where we at? I wanted to see the market. I drew this out. Where'd this go? All right, guys, keep me honest from last week. I wanted to see the market trade back up into this 4-hour fair value gap. We were trapping volume here. And again, I wanted to see the market continue to go lower, right? And that's kind of what we've gotten here. And I said, basically above these levels, this level here, if we invert this gap, then I'm looking for it to continue to go higher and take out highs. If not, we're going lower. And right now we're just kind of dancing in a range, right? So when you're trading in a range on NASDAQ or any asset class, right, you want to be careful because this is where people blow accounts, right? So you really can only look for levels here. But ideally, and I always used to miss this when I was a younger trader, as I would always be looking to be eager to buy or sell, and I would kind of forget to take a step back and look and actually see what the market's doing and see that in this case our highs are getting higher and our lows are getting higher and our highs are getting lower. So this is a basic, we're trapping volume here. So I'm going to take a step back from NASDAQ and wait until we get a clear market direction here, or we're going to shoot for lower targets, right? And so in this case, I'm not going to actually give a prediction on this week on NASDAQ because I can see us going lower. I can see us going higher. We're technically in a bearish run on the 4-hour. We are getting lower. So levels that I would be looking to see us hit if we did go bearish would be this level here at 18,083, right? And this is if we do stick with this bearish idea. But on the bullish side here, I know this is good part. It's going to suck because I usually give market directions and I usually say this is exactly what I want to see this week. But when you're trading in a range, you'd be an idiot to kind of give just a public prediction on where you think price is going to go. So you kind of have to play it like how most retail traders play it, where it's like if it does this, then it does this, right? And so the levels that I'll be watching this week in the higher time frame picture, we're bearish still, like nothing's really changed. So I'm going to lean on the higher time frame and I'm going to gun to my head, I'm going to want this to go lower. I feel like at the monthly, yeah, this is a crazy month so far. We still have 2 weeks left, so like this month could easily tank. It easily could go higher. We're just in a bad point. And anytime you're trading in the middle of the range, right? If we look at this swing to that swing and we find ourselves trading in the middle of it, it's usually the hardest place to predict a continuation. because we can easily predict when it bounces, right? Or we could have predicted all of this rundown, but it's the middle range is the hardest part. But since we're getting rejections from this, we're about to break structure. I'm going to lean with the idea that we're going to come back down, right? So I'm going to be leaning with the idea that we're going to retrace these lows at least. I'd like to see how we react to this bullish fair value gap here. But also, I guess I will put the disclaimer out that even though I am doing these breakdowns for NASDAQ, I just don't like how NASDAQ is moving here. And I will say what I said last week is that if you are trading NASDAQ, look for short-term, like the daily bias in this situation is not going to mean as much as you identifying, for hourly draws of liquidity, right? So if you're coming into NASDAQ about 9:30, 10 o'clock, right? Like it's trying to find your actual draw on liquidity based on what's going on that day, instead of relying on the overarching bigger picture. And for me, I'm just a better trader when I have a bigger picture in my mind of where I think price is going. And although I do think this is bearish, the fact that we are trapping volume also means that we could break out and go higher just as easily. So I just want to I would play this very carefully this week, and really just look for opportunities for short-term grabs of liquidity. And if you don't have a clear trend, again, there's nothing wrong. I think too many gurus, quote unquote, or people online, they come online and they're like, I know where this price is going, and that's why you should pay for my course, or like whatever, like bullshit they're saying. But like you should, a good trader will let you know, like he has no idea, or he or she has no idea where price is going to go when they don't, right? And I'm saying right now, like, yeah, I have no idea where the long-term picture of this is going to go. We are bearish still on like the higher time frames, but again, we're trapping volume here. This easily could just shoot up and break out, right? I have no idea. And you add in the fact that, with one tweet, the whole market could change. So like, you just play it carefully. And right now I'm more looking at currencies because they're a little bit more stable, right? It's cool to have volatility, and it's fun when it works, but it hurts, and everybody knows it sucks when you're on the other side of the wrong volatility. So let me look at ES and see if there's something different. ES, we're consolidating too, right? It's the same thing, right? It's a little cleaner. See, notice, oh man, notice how our highs are getting lower, our lows are getting higher. This is basically just huge consolidation. So I need to see some level of manipulation before I can make a guess. Gun to my head, though, I would probably like to see this continue on with the bearishness that we're getting. But I don't have. I could see us running this weekly level here. And this is what I wanted to see last week. Is I wanted to see the market trade back up into this gap and then kind of play it based on this reaction. So I'll say that same thing again. If I go back to NASDAQ, I think it's the same. No, this level is not there on NASDAQ. So I'll say that, like, when it comes to ES and again, US 500, I really want to see how the market reacts to this level here before I give like a long-term prediction. And again, just me personally, I trade better with a long-term bias. And so that way I can line things up with that. When I don't see it, I stay away from it. YM, same. So we gapped up for the week. If we go to the daily time frame. Yeah, so we gapped up for this week, and it looks like pretty much we're running bearish too. We traded back into this daily imbalance, and we're running lower. So I'm again, I would like to say bearishness, right? And this one's a little more clear than the others, but we also have this huge level of buy side liquidity that we didn't sweep here either, and that worries me because there's going to be a lot of liquidity sitting here. If I could get the shape, there's going to be a lot of money sitting right there because they're all going to see this as going short again. We're trying to catch that next short swing. So I would not be surprised if the market does come run up and take that out. And so basically, again, not getting the best picture, but I like Dow Jones a little bit more, US30, YM, right? Same thing. just because we haven't swept this high, and it's very clearly building liquidity in that area. So I could see something like this, right, where we go like that. Maybe we run that low, maybe, or consequent encroachment of that low right there, this wick, and then turn around and go higher. It also lines up with the ES idea that we could hit this fair value gap at some point. But NASDAQ is not clear at all. Like, this is just chop. And if you can clearly see something in this, then, maybe you're psychic, maybe you're Rain Man, something, I don't know. But, I don't know. And I'm not scared to say I don't know, because there's other good setups too. Last one I'm going to look at. So I ended up taking a couple trades on odd. So the trades that I took, I actually passed the 150K account challenge with Top Step last week. I had an extra one that just kept auto billing. I was like, let me do this, right? And so ended up taking a couple trades on Euro, which outlined, I outlined in the mentorship group. But odd and New Zealand, I actually like a lot right now because they are very bullish, and they're very clearly bullish. And so last week, coming into the market on odd and New Zealand dollar, there's a couple things that I wanted to see, and I'm just going to get rid of all this stuff because, again, my charts are dirty because I actually trade every day. Like, if you're a mentor, every time you come to the chart on TradingView, he has clean charts, he's probably a scammer. So that's just my thoughts. So coming into last week, we had these relative equal highs here, and then sitting below this overall target here. So I figured at some point the market was going to run back up and hit this liquidity. If we jump down to the daily time frame on odd, I wanted to see us retest this low and go higher. And I kept telling my mentorship group that this pullback level here is a best case scenario. We don't always get the pullback that we want to see, but as long as we have an overall narrative for the market and a bias that lines up, we can still try and find something to capitalize on. And so I wanted to see the market get up here, right? So this was a great opportunity for a low for the week where we could trade from, this low to that high somewhere, but we ended up not getting that. So you got to make adjustments. So the market inverted this fair value gap here, and there was a couple trades that I ended up taking from here to here, but where all of this little stuff is noted on the small time frames. There was 2 days of bullishness in odd, and I ended up taking it on Australian futures. But again, same chart. So where are we sitting at this week? We have 3 highs, like multiple highs here, sitting under this low. And this is our draw on liquidity. This is what I've been saying for the past couple weeks, that we want to get the market and take it up here and really run these highs. And so I'm still looking at this money sitting up here, right? And I want to see the market really come out and take this highs. Once we get here, yeah, I'm going to get flat, right? And I would take a step back from the market to see if we sweep this high and then keep running back down with the downtrend, which I don't think is going to happen. I think we're going to run bullishness. I'm also looking at this right here. Again, my students, you guys should know what that is and why my eye would be drawn to that. But the next level that I would be looking at is this level up here, the high of this, especially if we get a good run above this. So again, I'm still bullish on odd USD or Australian futures, whatever you are trading. And maybe we would run this like last week's low or something. Like we would run down here. Not last week's low, but Friday's low or Wednesday's low. And then, take things to the high. But I'm still bullish. And then, so NZD is probably very similar. So again, I don't really trade these too much, Australian and New Zealand. They are good pairs to trade and good assets to trade. But I just, I usually opt for something faster like pound or euro. So shout out to Tony taking notes as always. Tony's killing the game, man. I posted, if you guys follow me on Instagram, I actually posted a story last night, and I highlighted some of the student success that I've seen. And Tony's one of those guys that, again, if you follow me on Brinks Trades, you can kind of see that story. But Tony's one of those guys where he's been killing the game, man. He's been getting withdrawals. He flipped an account like 300%, right? I think based on what he showed me in the chat. He's passed his first, I think, funded challenge this past week, and he's been killing the game, right? And so he's a trader that's been taking small amounts of his personal capital and growing them. And so when he gets on this funded account train, as long as he stays focused, man, he's gonna be doing some things. Stay, not to put any pressure on you, bro, but I'm just happy with the progress and happy with the growth that I'm seeing him. Other people too, Hugo, Janice. There's been a lot of people in the mentorship group that are really going crazy right now. So I'll drop a link to that in a second. But that's pretty much all I have for you guys for this week. If you guys want to stay locked in with me, follow me on social media, Brinks Trades. You can always check that out. But then also, stay locked in with me on my free mentorship group, right? And this is the Profit Playbook. This is my community where I do two different things. I have a free mentorship chat, or free group chat, I guess, where I basically kind of do updated analysis throughout the week, because a lot of times stuff will change based on market conditions, or maybe a lot of times I like to see what Monday does before I really kind of commit to this bias that I'm getting for the week. And so you guys can find that there, and then stay in tune with that chat. But also, if you guys are interested in learning how I see the markets and kind of the style, I've been doing this Trading Up podcast for like 2 years, and if you guys go back, you can see 2 years of pretty much accurate market predictions. There's some weeks where I'm off, for sure. But I think it's like an 80 something % hit rate on the market direction. When it comes to my own personal trading, I keep a lot of stats, and usually I'm around that 66% win rate. But if you want to learn a little bit more how I actually see the markets, paid option to that mentorship group as well, where you guys can learn directly from me in a bunch of YouTube style videos. Watch me trade live, and I trade live 3 times a week, and basically walk people through how I see my style. And the way that I see it is, when you learn from somebody, it's one thing to learn from a course, right? But what really helped me become profitable as a trader and see the markets in a better light is watching people do it live, right? And I know a lot of traders shy away from trading live, and there's reasons for that too, because there's really, you got to be really there's a lot of legal gray area when it comes to trading live, and making sure that you're positioning yourself as a education service and not a signal provider, right? And I'm not a signal provider. I don't call out signals, right? I trade live. I let people watch me live. Usually I'm trading with a funded account. And really, I think it helps the learning curve on a lot of people, because once you see my thought process coupled with the strategy, it starts to come alive and you start to see it. So I'll drop a link to that chat. And then also, if you guys, again, this is the free chat right here. You guys can just hop in there, and again, it doesn't cost you anything. And I always tell people, when I first started trading, I would have killed to have a chat where I was just learning, you know what I mean? And I could watch people trade live and actually see their thought process, and they talk through stuff. So, so check that out. And then also, man, if y'all are following me, you guys can see me do the 10K challenge. So again, my whole brand is about authenticity, right? I want to show people that trading is an actual possible way to consistently make money, as long as you learn a skill set. There's no guarantee, obviously, you'll make money. I don't want to guarantee you will, right? Because there's a lot of things that goes into it. You have to learn a skill set. You have to understand that skill set. You have to understand your mental, right, and how you fail from a psychological perspective. You also have to understand how to push the button and manage a trade under pressure. And that's one of the things that people, fail to do, right? And I think a lot of times they blame the strategy when they should be blaming themselves, or they just don't have a good straight strategy in general. But there's a lot of pieces where this thing can fall apart. But there's also an opportunity where people can really change their lives with it too, right? You see this prop firm space, which I didn't have when I first came into the game. Prop firms weren't a thing, or they weren't really well known. So watching everybody do that, it just adds more of the belief level. So anyway, my whole brand is built around authenticity, right? And just really making sure that like people can um, really see somebody actually learn how to trade, or who knows how to trade, has been doing this for a decade, and show them grow an account and do things like that. So I'm doing a 10K challenge, right? And what I mean by 10K challenge is not a 10K prop firm. It's literally me taking $10,000 of my own money, and I'll be growing it through the rest of the summer. And I'll be linking it to my Facebook on a verified broker. It's not a overseas broker. I don't have a relationship with the brokers. I don't do any of that stuff. So I'll be using OAND as my broker. It is a legitimate US broker, and you guys can watch me grow that account over the next, 3, 4, 5, 6, 8 weeks, probably to the end of the summer, maybe to the end of the year, right? But I want to show people that that's possible. I did the same thing already on an AMP futures broker last year, and I was able to take a $10,000 account to $40,000 in about 4 months. It was a little under 4 months. It was like August through beginning of November. So August, September, October. So like 3 months, honestly. But yeah, it's like 3.5, I think, something like that. Three months and 10 days or something like that. So $10,000 to $40,000 in a short amount of time, right? And so again, if you take that number and you times it by 4, which would give you like an entire year, right? We're talking like 120 grand in a year from a $10,000 account, which, again, in the world of social media, doesn't seem like it is a crazy big number, right? But when you see people posting millions of dollars, but I think most people would agree that 6 figures, off of a $10,000 investment is a crazy ROI, and it would allow you to trade probably full time. You know what I mean? So I just want to show people what's possible. So again, follow that journey. I'm going to be posting a lot of updates. Get in the Discord. It's free, man. It's a free resource. Again, at least that group chat is free. That's where I'll be posting all the updates to there. So, I'm just saying, like, if you want to see me do this and you want to build your belief level, or if you just want some inspiration or a community of traders where you see people winning and it's authentic, yeah, just hop in there. So that's all I got. So I got a couple questions, or got time for a couple questions. So if you guys are interested in trading, or you have trading questions and you want to, get your questions off, feel free to do that. They could be mindset related. They could be strategy related. They could be projection related. I got a couple minutes, so just, feel free to hop in with those. And I will answer them. Let me see. Okay, cool. Let me see. Live on Instagram too. That was the one thing that I wanted to make sure was working, was Instagram Live. Yeah, a bunch of people hop in and out, man. Let's see. So I don't see any questions. I'll leave it open for a couple minutes. But okay. Well, this will stay open. Again, if y'all want to get in contact with me, the best way to get in contact with me is through the Discord. I'm pretty active on that chat. I try to hop in there a few times a day and answer questions. But I would say social media, right? Subscribe to the YouTube channel, Brinks Trades, on all social media platforms. You'll see this little icon, this little cartoon icon of me with a blue background. But yeah, stay locked in, man. It's going to be a really cool 10K challenge. It's going to be really cool, rest of the quarter. I think it's going to be a lot of volatility, a lot of good things. And I'm excited to see where the market takes us. So I will let y'all go. Hopefully y'all have a good rest of the week, and I'll catch y'all next time. So peace.
Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex, indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.